Holding companies are not new among Nigerian banks. Thanks to the 2011 CBN regulation that made banks give up their non-banking businesses and restructure into holding structures, a number of banks spun out their subsidiaries like Stanbic IBTC, First Bank, FCMB, and so on and so forth. Now, last year, of course, Access Bank joined the fray, and in the future, in the near term, Sterling Bank and Guaranty Trust Bank intend to adopt HoldCo structures. So, well, how does that affect valuations and a number of other issues? We will be seeing even more banks going this route. Seyi Omidiora, who is an analyst at Financial Derivatives Company Limited, joins us to discuss further. Seyi, you're very welcome. Good morning to you. So, I mean, what do you make of, should I call it a recent flurry, or these banks that we're seeing, GT, Sterling, and so on, Access Bank last year, looking at intending to possibly get permission to go into HoldCo structures? What do you make of this?
Okay, yes. So what we know about holdcos generally is that they are companies that don't conduct any business of their own. What they do basically is they own subsidiaries, and now it's these subsidiaries that generate revenue for themselves and consequently for the holding companies. So now there are several advantages for actually going the HoldCo route. One of which is tax incentives. There are some possible tax savings depending on where the holding company is structured. Another thing is it also enables some corporations to actually go take risky investments, for example, and then, of course, they segregate that from the business itself of the subsidiaries, and therefore shielding their subsidiaries from the risks of those investments. Now, looking at the reasons why some banks might be opting for the HoldCo strategy now, what we have seen is that the financial markets in Nigeria have grown substantially in the last 10, 15 years. And at the time some of these firms divested from their holdings, like Guaranty Trust Bank that divested from Investment One and Mantard, for example. Now, at the time they divested, it was, you can say that it was hard to project that the financial markets would move in the direction in which it has moved. And of course, now we have seen the pension industry move up to about 12 trillion naira.
Yes.
We have seen the what's it called, mutual fund industry also move up to about 1 trillion naira. So of course, that's a lot of money being left on the table. And what these people are looking at is to bring all these subsidiaries under one umbrella so that they can also benefit from the income being generated from these industries, from these sectors. Another thing is we see that some of the bank CEOs, their tenures might be coming to an end shortly. And of course, this transforming into a HoldCo structure enables them to stay within the system. So instead of leaving the bank, basically they basically transition into being the CEOs of the HoldCo. So those are two of the reasons why they might actually want to go for the HoldCo structures.
Great stuff. I think most of the banks are quoted on the exchange, some still privately held. As far as this, what we've seen recently with some of these banks wanting to go towards the HoldCo structure, and I guess the HoldCos, which are the parents of the banks, being listed on the exchange, is there a valuation concern for shareholders at all?
Well, I don't think so.
Okay.
Because what we are, in terms of valuations, what we are likely to see is that research analysts are the ones who actually go into the market, do their research, and then come back and determine what the, say, fair value of these securities should be. And of course, they are incorporating all available information there is out there before actually coming up with their recommendations. So in terms of valuation concerns and looking at the kinds of regulations that we have, I mean, we can even say that banks are even over-regulated in Nigeria to begin with. So it's not going to be a concern, I don't think.
Okay. The United States banking system is believed to be probably one of the first to adopt the holding company structure and kicking off this phenomenon. Any lessons to be learned with respect? I mean, you're talking about regulation just a second ago. You've got different regulators in the U.S. financial system. Any lessons learned possibly from their system over there compared to ours?
So what we have seen in the US is they operate a different system, a different banking system from what we operate here.
Okay.
We operate a universal banking system, but in the United States, they operate a system where commercial banks and investment banks are separated. And in so doing, the operations of both don't come together, are not integrated in any way. There was a point where they tried to integrate them, but then I think it didn't work, and so they went back to the system where they currently still maintain. Now, in the US, the Federal Reserve, which is the equivalent of the central bank here in Nigeria, are basically have a mandate to work monetary policy. But then the Office of the Controller of Currency now are the ones who have oversight on the banks. Now, each of these, they are in the US. The number of federal banks aren't many, but there are state banks. Now, these state banks are controlled or are being supervised by the Office of the Controller of Currency in those particular states. Now,
so it's decentralized.
Yeah, it's
at the
decentralized
state level,
yeah,
right?
It's at the state level. Yeah, exactly. So that's exactly how it is. But in Nigeria, for example, it's not like that. The central bank oversees monetary policy, also oversees regulation of the banks and all of that. So there's a lot more centralization here. But in my honest opinion, I don't think that we should move away from what we are currently doing. I think we should stay here, considering the level of trust in the society is still a bit low. So regulation, to a fair extent, is still a good thing.
Great stuff. Great stuff. We're going to see how things work out, I guess, with the rest of those banks that are looking to adopt those HoldCo structures, and have you back to analyze that. Seyi Omidiora, analyst at Financial Derivatives Company Limited. Appreciate you coming in.